Hey, good morning, guys. So this one's going to be relatively quick, I hope. And I guess the thing is, what I want to share, right, is a little bit more kind of in depth as to why I'm seeing, what Bitcoin is, where it is, what it's likely to do next, and so on and so on, right? Now, if you don't follow me or you haven't seen any of my videos, any of Paul's videos, anything we've posted on TradingView, then obviously this is going to be quite new to you. If you do follow us, then of course you're going to know some of this. What I want to do is just cover, right, why for me things, are changing slowly rather than, today it's up, tomorrow it's down. It's not quite as simple as this, right? And I just want to go into a little bit of depth. If you're not interested now and you just want me to say, hey, Bitcoin's going to 100K, just go watch a car video, right? This isn't where we're off. This isn't where we're going. And I just want to give you the logic. If you want to make money trading, this is how you do it, right? So to start with, what I'm going to do, I'm going to come back to what I've talked about over the last couple of years, right? This goes back to, calling long positions publicly, and after kind of what I was doing money management wise, I was able to post some of these calls publicly and talk about them, kind of at depth really, and just go into the detail, the nitty gritties as to why these things kind of play themselves out, right? So obviously, from knowing where we've been, it's an awful lot easier to understand where we're going, right? And this is part of the reason that I kind of keep coming back to these posts, right? These posts are not a hey, look how good I've done. I've called every single move over the last couple of years. It's understanding the logic as to how I was able to call all of these moves, right? And it's the logic that I'm trying to get across to you guys in terms of the people watching these videos to really, really hit the message home, right? Now, if we look at where we've been, right, and we look at kind of where we are, look at this flat bottom that we have here, right? So we come back to the charts, and I'm looking at this and saying, what has caused this type of move? Right? Now, there's an obvious answer to this, and the obvious answer is sitting over in a couple of different things. Back in October last year, I shared this particular image with our students, right? This is the Discord kind of paid for area. And I talked about, what I was seeing inside of this move, right? Why this was a move to start with, what this looks like, why it looks like. And as you'll see on the top side of the schematic, I've only got a single line. And the single line was there because the second line hadn't formed yet. Now, ultimately, understanding the sequence, understanding the process, right? And I've just covered obviously the phases of why I've talked about long at the bottom, reaccumulation, drop, why 28 was key, and I've covered all of this. You can scroll through all of these, right, in some depth. Right? I've talked about every single aspect of this along the way. Now, I understand most people didn't want a short call. They were still buying Plan B's 135K trip to the moon. The reality is, this is just an algorithm seeking liquidity, right? And it's going to be the same thing over and over and over again. Right? I can talk about why these calls, what I was seeing with these calls, why this was only going to go back up as early as August, why we would only see 65K, just above, and then we drop down below. Where was the liquidity sitting? Right? These are the things that are pretty obvious when you understand what to look for. So going back then to once you understand where we've been, it's an awful lot easier to understand where we're going, right? Now, ultimately, with this as a situation, what I'm currently seeing and why I'm currently seeing this, we've got ourselves in a pretty interesting position that I think we're still early on in the accumulation phase. Now, the second part of the answer, and then the second logical step to this answer, actually lies in COT data. So when we look at the COT intel right now, we've got to come across and look at the leverage funds. I'm going to scroll up. I think this is Ethereum to start with. Yeah, Ethereum there. Here's the Bitcoin view. So again, I've covered this in multiple streams, right? If you look at what the bigger players are doing, bigger players entering the market isn't necessarily meaning that the price goes up. It means that these guys want to buy at fair value. These guys are not going to make retailers rich. These guys are here to make themselves rich and screw retail, right? And you obviously fit in the retail category. So this is the first thing. Overall, right, when you understand a couple of these things combined, you put these kind of pieces together, you can see that we've had the first level of accumulation. We've had a reaccumulation followed by a distribution. We come back to a larger scale reaccumulation, right, followed by the smaller scale reaccumulation, followed by the first major distribution. Right? Now, distribution here, followed by redistribution, brings us back down, right, to a much, much larger play. Now, I've talked about this a couple of times. This could easily be the monthly 3, followed by a monthly 4, right, which means we want to come up for a monthly 5. Right now, technically, this was invalidated at the 4, but not enough for me personally to worry about it. Right, the liquidity sitting there was kind of tapped into, but not tapped into enough for me to see this as an invalidation. Right? Elliot himself didn't use the wicks, for example, on a timely kind of frame, I suppose a monthly time frame. So we're actually seeing only a dip into the wick rather than a dip into the body, right? So for me, this again is kind of another sign, another indicator, another indication that we could easily be in this type of move. The second option, right, is that this completed 3, 4, 5, which puts us in one cycle higher as a 1 move. Right? We would then come down, this would actually be a 2 move of a much bigger cycle rather than a 4. Right? However, in any scenario, either scenario, any which way, any any worst case scenario, we're either at a 2 or a 4, right? And you don't need to go into any more depth than that, really, in terms of the technical side of this. So now what we're looking at is we've got COT data saying, well, the big boys are kind of buying to a degree. They've held off their buy-in. Let me see when this date was. They've held off the buy-in and almost reversed this, right? You've got the green coming down, lower lows and lower highs, all the way from, when was this? This is October, right? So the start of October. So if you look at what has actually happened, start of October, let's scroll through January, February, around this time, okay? This really highlights to me that the big boys are still selling off into these moves up, right? And this doesn't mean, big boys getting wrecked. This means big boys selling to you, controlling the price, knowing full well the price is coming back for them to reaccumulate the positions that you were lost. Okay, so where we are at the moment is with early stage accumulation, and I've covered this in several streams. It makes sense in terms of the phases of Bitcoin, as I've covered in this particular post. Now, for me, this is where it starts to get a little bit more kind of interesting. I know some of you will just knock off in terms of where we're at this point. You just want to know buy or sell right now. If you want to learn to make money trading Bitcoin on a regular, consistent basis, you have to know some of these things, right? You have to learn some of these things. One of the reasons that I keep bashing, and I know Paul does the same, we keep bashing people like Moon Carl, Crypto, BitBoy, even people like Plan B, right? When you have calls like this, worst case scenario, 135K, right? And this was a worst case scenario for the following month. This was up around here. If you look at what we've done in terms of the exhaustion, we've had this really nice move What makes anyone think we were going to replicate the move and double up on that move at that particular point, right? We would have had to have seen literally the following month, we would have had to have seen something along these lines. After a move that was already showing exhaustion as early as August. Right? I talked about this. This is the 24th of August, as you can see there. We were already seeing exhaustion then, right? It was clear as day, miles away. This particular move down, it's not really a bad thing, right? It would have only been a bad thing if you didn't understand, if you were following these clowns and these influencers, right? The reason that we keep talking about it and the reason that we keep kind of bashing them is that there's an awful lot of ways traders and new traders especially can lose money in the market, and a lot of the times even before placing a trade. So often with these, affiliate links that are being shilled and bonuses and sign up bonuses and so on and so on. The challenge being is these influencers, these guys don't make money trading, right? And we've proven this on several occasions. For example, this one here, you know, I've talked about this guy, and we talked and talked and talked about this guy. And I know for some people this gets almost boring, right? But you have to remember everyone's a beginner, right? And everyone has been a beginner. When you have new beginners coming into the market, you really have to teach them, hold their hand from day one as to where are these pitfalls, why are these pitfalls, right? If you zoom in, obviously, into this particular image, what you can see, top right hand side, to start trading, transfer your wallet funds into your trading account. Right? And yet this guy is claiming to be trading, millions and millions and millions, right? Clearly demo account, right? When the guy responded back to my email and actually back to this particular post, he come back with a completely different platform to suggest that, oh, look, he wasn't trading a demo account, right? This is how ridiculous these clowns are. So if you're going to follow them, be prepared for this, right? Be prepared for these red bags. If you're willing to spend the time to learn and understand, what we're doing, why we're doing what we're doing, where the sentiment is at, it's as clear as day that we are pretty early on in the schematic. Now, the same schematic that I shared back in October last year with our subscribers, I'm going to stick this on the chart there. We've now created, in essence, a top, right, which adds to the resistance band. We're very likely to come back down for an STB. Right? This doesn't necessarily have to be deep, but what it does need to do is do enough damage for retail traders to be emotionally unstable. Now, this is where you've held your position for an awful long time, right? And you take some of these Plan B followers that were buying at 65, 68, 69K. You've held your position thinking, well, Bitcoin will go up. Bitcoin's only going to go up. Bitcoin will go up in the future. Now, imagine this roller coaster of a ride that you've had all the way down. You've had people like Moon Carl saying, buy this dip, buy this dip, buy this dip. And the truth of the matter is, every buy the dip has been on the reaction, the rejection, right? Because a lot of these moves, when you see people paint things like, oh, there's this trend line and it's doing this, once we break a trend line and it goes up, you're going to want to retest, right? And a lot of these people will say, oh, well, this is the way you do it. You buy this dip. And a lot of these dips, look, right, were bought around these kinds of regions and probably added to losing positions, right, because they were clearly already in at 65K plus. Truth of the matter is, we come back down, right? And again, it's buy every single dip, buy every single dip. Now, ultimately, if you buy in at leverage, which a lot of these influencers kind of advocate for, trading on leverage, trading with leverage, it's going to be very, very emotional for you when you've bought your first purchase at a 65k plus figure. You've probably bought your second purchase at a 50k, right? Which means even with a DCA, you're in a position where you're still carrying and holding red bags. If you imagine now, we get to this 15.5k, right? And you might have loaded up, you might have said, oh, well, I'm going to wait until we see 12, or I'm going to wait until we see 9. I'm not going to bother buying anymore. I've bought enough at 60. It will come back at one stage. You're going to be in a position where the price rallies and that hope, that belief, kind of gets you back in the market, right? So you're now thinking, actually, maybe I could buy again. Right? Maybe I'm very likely wanting to buy again. So you start buying levels like this. Right? You start buying levels like this. And all of a sudden, the price pushes down. Right? Now, at this particular stage, you've got such a feeling of resentment, anger, right? You are actually pissed at the market. You're in a position where you're going to want to sell off. And this is where Composite Man makes his money. Right? This is where the big players, the institutional players, this is where they make the money. Right? Knowing what retail is likely thinking, everybody wants 100k by Christmas. This is the last thing that's likely to happen. The reality is, this coming back down is only very likely to create a phase B in the market. Now, again, if you don't know Wyckoff, we got a free Skillshare course you can take. You can come and look into what we do in even Discord for free, and come and see. Come learn, come understand. When you look at what we've done, what we're doing, right? I'm going to take this schematic off. Take this off, and I'll show you then on a monthly time frame in a second. But what I want to do before jumping into that monthly time frame, I'm going to show you a couple of images, right? So again, if you don't know me and you haven't followed me, right, I've recently had a book published, right? And this is something that I've taken a couple of little screenshots from the book, and I've talked about this in a couple of forms, right? So first thing I want to do is share this one, right? This is relevant given we've just spoken about Wyckoff. So understanding the market and knowing what Wyckoff was talking about over 100 years ago, human emotions have not changed. Right? If anything, they've almost been accelerated in terms of the fear and the greed, right? With the rise of the internet, social media, and so on and so on. It's an awful lot easier to get trapped into the wrong sentiment for the wrong reasons. This is why I've actually called this chapter around all of this the emotional analysis. A lot of people don't talk about this. They talk about technical analysis, sentiment, talk about fundamental analysis. There's actually a deeper layer, and this is the emotional side. So just read this for a second and let this, truly sink in, right? Just read it. Okay, so understanding where we are, first of all, we are in an accumulation. There's no two ways about it, right? Whether we're a 4, whether we're a 2. I like both scenarios. When you think of what retail is looking for, it's 100k by Christmas, bare minimum, right? If you're talking about Plan B, it's 100k by 2 Christmases ago, right? These guys haven't got a clue. Stop following them. The next thing is, when we look at what the markets are doing and the algorithm kind of seeking liquidity, it's clear to see that newer traders coming to the market are seeking opportunities. But the fear, right, and this comes back to the Wyckoff analysis, the fear is keeping them out of the market. We're more likely to see more buyers come in at 30k, 50k, 60k than we are at these, 15 to 30k levels. Now, this is one thing that I do like, and I've used these quotes throughout the book intentionally. Everyone kind of opens up a chapter, or I use it in terms of going through the chapter as to what the depth of the lesson is trying to teach you. All new news is old news happening to new people, right? Again, let that sink in for just a second. These quotes are absolutely fantastic. None of them are mine. These are all guys, very famous in this kind of space in this world. And they've just hit the nail on the head every time, right? The point is so critical to grasp on every single chapter. So the next one is I believe in analysis rather than forecasting. Right? Now, this again is, people like Plan B forecasting, right? A stock to flow model ultimately is great when it comes to supply and useless when it comes then to the demand, right? And technically, it's the other way around, right? The idea is if you're only measuring sentiment on one side, you're not very likely to understand what's coming in from the other side. Right? So when you've got a demand model, as in stock to flow, right, it's basically showing how much demand is there in the market. Right? Now, what this fails to take into account is the overall supply held by composite man, the big operators. This is where COT comes in. Right? So the reason I said this is kind of inverse for me is a lot of people look at this in terms of the supply, right? And it's limited to supply because it's Bitcoin, it's 21 million coins, and so on and so on. What they fail to see is, the control of that particular supply. Right? This wasn't big boys getting wrecked on the way up. This is big boys selling off to retail on that same move up. And this is the beauty of it, right? So again, understanding these, overall. Now, before I go into the rest of these kind of quotes, and I'll cover this in a second. I'm going to put a link up in the top corner for my book. This is the book itself, Master the Art of Trading, and this goes into all the things that I'm covering in this stream, plus an awful lot more. And ultimately, it's a lot more depth. If you're not interested yet in terms of joining Discord, or you kind of see an opportunity, I guess, to sit and wait for your 50K buys, then it's a good starting point in the grand scheme of things. The next thing then is this one here, right? And this is, I guess, a very, very key point for me personally. I think a lot of people fail to pay attention to the kind of detail that I've just covered, right? I bet a lot of people will watch the first couple of minutes of this video and click off because it's boring, it's uninteresting, it's not for them. These are the guys carrying the red bags, right? If you've stayed with me this long and you understand what it is I'm trying to get across to you in a message, then ultimately it's all about that kind of fine print, right? It's all about the detail. If you know where we are, big picture, you can understand the overall bias, the entry, and the situation to kind of jump in the market. It becomes as clear as day, right? It becomes obvious. And this is why I can revert back to why I've called every single major move over the last couple of years publicly. Right? These aren't just lucky guesses. This is understanding the market inside out. Right? And I've talked about this, why, how, when, what, even down to why you see this move up here. Do you know the inside of a trend line? Can you use a trend line? Can you see what a trend line is likely to do? Why am I talking about this at the start of the move? What are we likely to see? Move up, move up, move up, drop. What did we do? Move up, dropped. Understanding where this money sits. Again, this isn't into liquidity and back into liquidity before the continuation down. These moves are already pre-programmed, preset, and I've shown you in advance, right? I want you guys to do this for yourself. You don't need to follow me in terms of, hey, what does Lewis say? What I really want for you is for you to look at these moves and say, that's obvious, right? One of the chapters, this is the second chapter in the book that I covered, is what I named Uncommon Sense, right? And this is talking about all of the things I've just covered. This is kind of idiots wanting buy me now calls, let's go to 100K by next week. This is the type of problem that we can actually benefit from in the market, right? And as a professional trader, this is almost a double-edged sword for me, right? It's exit liquidity usually for my trades. We're dealing with retail that have no clue. I can't educate enough retail for it to affect my trading style. There's no way, right? So I'm not concerned in terms of showing this to people who really want to see this, people who want to understand this in depth. Right? This is part of the reason we do what we do. We like the idea of helping others along the way understand this, right? We get pitched more or less every day in terms of affiliate links and, could you shell this and could you shell that? And we turn them down, right? We're not really interested in the grand scheme of things. Right? If there's a broker that we like, there's a broker that we can really see some value in, then of course we'll work with them. But we haven't gone chasing these people. Right? We're not looking for ways to make money outside of what we do. Right? And what we do is trading. In the grand scheme of things, the reason that we want this, I suppose, kind of knowledge out there is that there are people that are genuinely wanting to learn. Right? And these are the people that we're genuinely wanting to help. Now, this one for me is kind of comical. Right? This goes back to when I actually posted the rocket call. And the rocket call was, right at the top. This was actually after seeing the buyer's climax on the first major move up to the first 64, 65K high. Right? And this is where a lot of what I talk about in terms of the sentiment, when you come down into these, let me find where this particular one was. This one here, you'll see the optimism, belief, thrill, euphoria. Right? This is where a lot of these things kind of play themselves out. We've actually got, the optimism stage, I would say, probably around the reaccumulation. And this is obviously retail kind of getting excited. The trouble being is when you're watching then influencers call in for 135K plus, you're very unlikely to want to sell. And therefore the greed kicks in. And this is why the market then dies on that euphoria. Market drops down, we hit the 28K, right? And again, this was already pre-programmed into that search for liquidity, which was in March, right? This is the move you can see from the red box around what TradingView shows, why the fall was already pre-programmed into that as a position, right? These are things that are so simple to see, very, very simple to see. But a lot of people still want to believe that this is going to the moon, sometime soon. Now, I'm going to leave it, like this for today, right? Obviously, the next couple of videos, I'm going to go into detail in terms of why we are where we are, what we're actually doing from this as a situation. But I think for me, when I covered this just now with the current schematic in terms of where we're at, the last thing I want to leave you with for this video in preparation for the next is to actually zoom out to a monthly time frame and look at what we're doing from a stochastic point of view, right? And you've got to keep in mind, guys, this is actually a monthly time frame, right? If this isn't enough of a clue, then I don't know what is, right? There's lots of other things that I've covered in the last couple of streams, and like I said, I'm going to start putting these things together in the next couple of streams, right? So stay tuned. Thanks for watching this one, and we'll see you in the next stream. Cheers, guys.